Hey guys, welcome back to Clownfish TV. This is Neon, and I'm going to tell you how much BuzzFeed is worth. It's worth about $4 a share. Yeah, we're going to talk about the BuzzFeed stock debacle. We're going to talk about BuzzFeed's declining value. Of course, BuzzFeed went public just a couple of weeks ago, and immediately the stock started to plummet. It started out at like $10 or $11 a share, went down to about $5 or $6 a share, and now we're down to about $4 a share. BuzzFeed is basically worthless. We've talked about this before, and there's something else that's at stake that's much, much bigger than just BuzzFeed. All of these garbage tier digital media sites are failing miserably. They're consolidating, they're trying to rustle up more venture capital, they're laying people off. Shifting to video, pivoting to video. People are leaving because digital media is in a really bad state right now, and they were hoping that BuzzFeed was going to lead the way, that they were going to go public, that they were going to make a bunch of money. And right before they went public, they had investors pull their funding, and it's just been one disaster after another. And this does not look good for other digital media companies at this point in time. And let's be honest, most of these companies were propped up with venture capital. Most of them, it was all smoke and mirrors. They were always hoping for an exit strategy. They were hoping to stay in business long enough to hoodwink some other investors into giving them a few more, hundreds of millions of dollars rounds of investment capital. If you've ever watched the WeWork documentary on Hulu, I highly recommend it. Same kind of a thing. We want to project success, staggering growth, staggering success as we take your money, but it was all built on a lie. And I think BuzzFeed and some of these other digital media outlets, we're starting to see now that it was all built on a lie. So before I get into it any further, please subscribe for more pop culture, news, views, and rants, guys. Over 252,000 subs. Thank you so much for the support. We do talk about pop culture. We talk about the media because the media has effectively waged war on fans of pop culture for the last 4 or 5 years. And a lot of news outlets like BuzzFeed, not just BuzzFeed, but other ones, Vice and Vox and Polygon and all these digital media outlets have been whacking the beehive, calling fans names, running down the toxic man babies and yada, 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 yada. And we're like, God, how do they stay in business? Because they've effectively alienated at least half of their audience, and they continue to do so, attacking fans, attacking readers. And the truth is, it's all smoke and mirrors. They're not actually profitable. People aren't actually reading their sites in the numbers that they need, and they're not actually paying for stuff like they need to be paying for it. People have moved on. They've pivoted to video. They've gone to YouTube. They've gone to podcasts to get their news. They've left a lot of these sites in the dust, and BuzzFeed is worth about $4 a share. Actually, I checked. We're up to $4.97, so they're rallying here, I guess, but it's not good. This is where they started, beginning of December. This is where they're at, right? Not good. This is coming from The Information. BuzzFeed's stock plunge has gone a little too far. This has to be a tough time to be Jonah Peretti. The BuzzFeed CEO has a reputation as a media visionary, is looking more than a little battered since the public listing of his digital media firm. No one would enjoy watching their stock drop 54% in 5 weeks. But must be worse for Peretti, a high-profile executive whose company's public debut was heavily anticipated by colleagues in the industry. This, again, everybody is looking at BuzzFeed because what happens to BuzzFeed is going to determine what happens to all these other digital media sites, and it is a catastrophe. How he must miss the halcyon days of 2016. So does G4 TV. We're going to talk about them in an upcoming video. They still think it's 2016. When the investment geniuses at NBC Universal, again associated with G4 TV, decided to put money into the company at a valuation of $1.7 billion. This is how they've coasted for the last 4 or 5 years. Investment capital and Trump outrage. At today's close of $4.39 a share, this would have been yesterday, The lowest closing level so far, BuzzFeed has a market cap of $579 million. That's barely more than what the New York Times is paying for The Athletic, which not only loses lots of money, but generates about 1/6 of the revenue of Peretti's company. Then again, The Athletic is a subscription business, which theoretically means its revenue should be more reliable than those of an advertising business. That's true. A lot of websites now are switching to paywalls and subscriptions because you can get more blood out of fewer stones. Peretti isn't a fan of the subscription business, having argued that paywalled news is bad for democracy. Yeah, you can stop laughing. Stop laughing right now. People always had to pay for newspapers in the prehistoric, pre-internet days, so that argument always seemed a little misguided to me. Yeah, actually, it could be argued that a for-profit newspaper needs to give people legit news, or they stop paying for the newspaper, and they stop buying advertisements. Sites like BuzzFeed and Vice and Vox and Polygon, since they give everything away, they can just spout off whatever hot takes they want to, hire whatever trash journos they want to, and there's really no repercussion. As long as they get the view, that's fine. Still, The Athletic's valuation demonstrates that BuzzFeed stock has fallen too far. So what's the stock actually worth? You can check out a report published this week. The first Wall Street firm published the research on BuzzFeed. It's Cohen and Company. Wall Street analysts are usually overenthusiastic about stocks, but Cohen put a price of just $7 on the stock. That's a lot higher than current levels, but shareholders probably hoped for a little more. Remember that the Special Purpose Acquisition Company, the SPAC, that merged with BuzzFeed traded at $9.62 the day the merger closed. Might be a little while before BuzzFeed stocks trade in the double digits. I don't think it's going to happen anytime soon. They estimate that the 2022 growth at BuzzFeed will mostly come from the acquisition of Complex Networks, with BuzzFeed's revenue growing only 8% when excluding the boost from Complex. That's a pretty anemic slowdown from 2021's growth rate. BuzzFeed hasn't reported its fourth quarter results yet, but disclosed some numbers in a little notice securities filing a couple days before Christmas. We saw it, which indicated that BuzzFeed's top line grew at around 16%. Without taking into account a small contribution from Complex, that would mean BuzzFeed fell short of the 2021 projections laid out when its SPAC merger was announced in June. Investors have had a reason to be wary, but at current levels, BuzzFeed looks way too cheap. Investors pulled out a couple days before they went public. They thought they had $200 million committed to it, or $288 million, I forget what it was, and they wound up with $16 million. So this is bad, guys, and this is going to be an indicator of what is going to happen with a lot of these websites going forward. Again, there are going to be mergers. Vox is merging with Group 9. We know BuzzFeed bought the Huffington Post and gutted them. We're going to have 2 or 3 digital media outlets that run all these websites, and I think a lot of these websites are going to be consolidated before it's all said and done. We're going to see a lot of journalists get laid off next year, or this year, 2022. Within the next year, we're going to see a lot of people get laid off as they pivot to video, and tastes change, and the news becomes more polarizing, and people have already kind of chosen their news outlets of choice, and they're not BuzzFeed, they're not Vox, they're not Vice, they're not Polygon. They're going elsewhere for news and opinions because these websites are trash, and they've been built on lies, years of lies. They weren't making the revenue that people thought they were making, and they've been living on venture capital, and the free ride is about over. So this is going to be a huge wake-up call for some people. I'm not trying to scare anybody. I'm not trying to, delight in the suffering of other people. But if you are a digital journalist working for any of these organizations right now, I would keep your resume updated.